Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor Barri Griffiths. Now, today we're joined by Jason Yarusi. Hey, Jason, how you doing, man?
I'm doing great, Barry. Excited to be here.
How did I do with your second name? Did I butcher it or did I do
kind of dude, perfect.
Spot okay. Okay. I've been known to mess them up from time to time. Well, hey man, thank you for being here today. Thank you for making the time. I really, really appreciate it. And it's going to be a great conversation today, no doubt. But before we jump into all of that, do you want to give us sort of a quick little introduction into who you are and what you've been up to?
Yeah, sure. So appreciate you having me. My name is Jason Yarusi. I currently live down in Murfreesboro, Tennessee. Just moved here 6 months ago from New Jersey. My wife and I have started an investment firm back in 2016 called Yarusi Holdings. We actively invest through syndications into apartment buildings. We're across soon to be a little over 950 units, but currently 850 units across 4 markets, Pennsylvania, Kentucky, Georgia, and also Florida. So we will be now taking on 2 new assets, one in Florida and another one here in Nashville or south of Nashville. And what we do is we go into these properties, look for them where they're underperforming, whether it's on the property side or the management side. A lot of these times it's on both. And we look to improve that. And we do this through syndication where we bring in partners and we run the operations of the property. And our current assets under management is right around 75 million.
Wow. Well, congratulations on your success. That's pretty cool. How did you get started in real estate? What kind of started? What gave you the bug? What pushed you into real estate investing?
So my wife and I, we met in in a couple different fields, but in the restaurant world. So we were working in bars and in clubs and doing a bunch of that. I had started, opened a restaurant in New York City, opened and sold a brewery at the time. We were working at this crazy outdoor bar, and lo and behold, we met in 2003. We didn't get together until almost 10 years later. And so at that time we got together. Right around that time, Hurricane Sandy happened in the East Coast. Big floods. A lot of damage. Well, my dad had this construction company, still has it, where they actually lift houses. They take houses and they'll move them or lift them for a bunch of different reasons, but a lot goes with flooding reasons. Well, my dad's business just exploded, right? And my brother, who was working for me in New York City at the time, and myself, we made the choice that we want to go out and help dad, really help him just push forward the business, noting that this was going to be a step, not the future, but it would be great to just really go out there, work as a team and push that out. So Peely, my wife and I, of course, and my brother, everybody moved out to New Jersey, helped the family business. And it was what you learn in that route is that you never have enough hours in a day, right? So when you're so busy, if allowed, we could have used 8 days and 25 hours a day. That's how much work there was going with flood related work from the storm. But the other side of that is that if you're not working, of course, you don't get paid. Like in a lot of worlds out there where, you have to be doing something for income to come in. And Peely was pregnant with our first child. We realized that, we want to find a way to get our time back and just choose our course of our day, choose the course of our life. And real estate was the topic that kept popping up, but you don't know what you don't know. So we started doing things like flipping and wholesaling, Airbnb. Peely went out, got her real estate license, just all these things to really discover that what we were doing with the construction world, being active, we now just added on a lot of active fields on top of that. So now we're really busy in construction side. We're really busy flipping, wholesaling. We were doing all these things good, but nothing great because we were just building on these things that had to be done. Took us to meet a connection who was buying rentals at a state and having a team, putting them together. And we said, well, that's a pretty viable source. We started doing this, started buying some rentals, some 2 and 3 units out in Indiana, putting together teams, getting them stabilized, getting them rented out. And lo and behold, we're doing what we're doing here. We don't have to be actively out there doing the operations. However, now checks just start showing up in the mail. All right, this is fantastic. But you quickly discover and quickly realize that if you want to scale that, you want to have, maybe enough to just really, really make a dent. It was going to be a logistical nightmare to have 40, 50, 60, duplexes around the city and trying to coordinate all that. So it had to be something else. And it came upon large apartment investing. And I said, whoa, there was where the light bulb went off. That's when it really started to make sense. And that's where we started to pivot, go all in. We sold those properties. We stopped all the flipping, the wholesale. We went all into large multifamily back in 2016. Bought our first property in May of 2017, was a 94 unit. And that was really the pinnacle for us to go and start taking the steps along our journey to where we are today.
Very cool journey. So your first property was a 94 unit, the first.
Correct. Yeah.
That's pretty awesome, man. It's not like no baby steps there, right? Just like right into the deep end. Like, how were you? For those people that might not know, buying first property as a 94 unit has a lot of challenges, right? Because to start off with, you don't have credibility, you don't have experience, you don't have a lot of these things in place that you need to buy a 94 unit. So how were you guys able to buy a 94 unit as your first, big apartment complex purchase?
Yeah. So great questions, right? So the first step that has to happen is you have to be mentally good with that, right? Because lots of times people will say, well, I'll start with a 10 unit or 20 unit or 30 unit, deeming that safe. But when you look at the property size, what's safer? A 10 unit where if you're 3 units occupied, you're 70%, or 3 units vacant, you're 70% occupied, or a 100 unit where if you're 3 units vacant, you're 97% occupied, right? So from a logistical standpoint, from an economies of scale standpoint, the larger you can go for a property, the more economies play in your favor, right? So you can now hire full-time staff, a leasing person, a maintenance person. The bank's going to see you as less risky, right? Because you now have 100 tenants compared to 10 or 5 that can now afford to pay down your mortgage. You're going to get more desirable terms for trades or other things because every time something happens, you're not going to have to run out there and have someone run out to the property to see what happens. From a lever of the income, you can do certain things that can really push a narrative, right? So if you have a 5 unit and you change out the toilets, and this is a real world example, maybe there's a little discount on your water bill. Well, on the 94 unit, we change out all the toilets there. That and going in and just really correcting some leaks and other cut our water bill down by 30%. At the time of that property, that increased the value of the property by almost $350,000, right? So you can do that across the board. So that's that first step. The other side of it is the credibility side and really just the bandwidth, right? And you're right. When you have your first property, you don't have the credibility in that space, but you do have the credibility, like yourself. Like you've been a successful wrestler, you've been a successful in Cirque du Soleil. They see that you've gone out there committed and taken action. And that's what you can rely on, right? And that's what other people can rely on. What has your track record said about you? How have you shown up in the other things, whether or not it be, working a white collar job or starting a business? How have you shown up before? Because that's how you're going to be credible. And that's how you're going to get your first deal done. And the other side of it is going to be your team. We surround ourselves to have connections with property managers, brokers, and keep asking for referrals from the teammates we like. So now we start having credibility because the property management company we're working with has 4,000 units in that area. They're very versed in this. They're very experienced. Okay, so that gives us credibility. We now start having investors who will invest with us because now they know us from outside, right? They know us from other paths. So they know that when we are into something, we're committed to do something great with it. And then now from banks, we start having banks that may be looking at the asset first in this side, and then second to understand who we are, but we're building ourselves upon all the team we're building around us.
Yeah, great answer. There's a ton of great information there. And then with this, it was just you and your wife that took this property down. You had no other general partners. You just you two as the GP team.
We had one general partner, my friend Kevin, on that one. So the first 3, he was on with us, and that was when our step in there. So he actually he still does. He works for Reese, which is now Moody's. So he also had a good commercial background too. So that helped the narrative. So it was Kevin and I and Peely, and we raised the capital from, I think, about 800K or 750, 800K from about 13 investors across the board. But they were all our network. They were all relationships that we had. We did a 506B and we raised it just from friends and family, just by saying, and what we did, which helped the narrative. And I always say to do this is that we didn't wait to have the deal to say, hey guys, we have this deal. And then they're like, whoa, what are you doing? What are you trying to do? And what is this thing you're doing? And it's a lot of noise and information for that investor to take in. We actually knew what we were going to look for, right? So whether it be a 50 to 100 unit in this range, we made a mock deal of what we were going after. So we started taking to our friends and our family and showing them this mock deal and saying, hey guys, here's what we're going to find. We'd love to talk to you more about it. So now they can understand that we're doing this, to the kind of properties that we're looking for and just the asset class of multifamily by itself. Next, how the deal will be structured. And where you leave this is that we would leave this with a bunch of soft commitments for nothing, right? For a basic mock deal right now, but soft commitments for a mock deal. But lo and behold, we found a real deal. And when we find these deals now, it's very easy to raise capital because we've already got the soft commitment, right? So 750,000, maybe it was 2-3 days we raised that because it was already raised, right? It was already done because we had done the legwork. And when you do this, and you do this with your banks, right, you understand what are the terms from the banks, what are they going to require. All the things that you can seemingly control before you find the deal will help you further along. So there's not so many missing pieces as you get there, right? So many missing pieces that will happen.
Yeah, that's awesome. I love that. You get creating that sample deal package so that people know what you guys are trying to do, what a deal will likely look like, what the returns will look like, does it look like from their perspective, and you've already prepped them rather than, like you said, you get the deal and now you panic, and then you've got to, you're coming from a position of weakness then as well, right? When you're trying to get these people, rather than coming from a position of strength. So I think it's really
so well said, because you have to actually ask for money at that point instead of seeing how you can provide value for them. Because if you can understand from an investor standpoint before the deal there, what are you looking for? How can we help you? Or is it, cash flow, appreciation, depreciation, tax advantages, or maybe we're not the right deal for you. That's fine too. But at least we can have those conversations beforehand to see what kind of deals are going to fit their box. So it gives it easier that we're providing value to show these will be opportunities that could help you. And so when we do have that opportunity, now it's something of me being able to help them instead of me being like, hey guys, we need you to invest. We got to close in 3 weeks.
Yeah, that makes a world of difference. That's a really good point. How did you guys find this deal? Do you just work with brokers, or were you utilizing any other?
You do need to have all tentacles out there, right? The brokers are always going to be the pinnacle point because they're going to have the most deal action. However, we found this through our property management company. He knew of the ownership. The father, who was in his 90s, had passed away. The kids had now taken this on. They all lived out of state, and the kids were like 50s and 60s. So there was like 4 of them. The ask price was like $3.2 million. And we, at the time, because, early deal and just what the deal is they had this crazy thought in their mind that they wanted 3.2 million just out of the blue. We wrote an offer to 2.1 million. Well, they came back and countered at 3.2 million. So the negotiation didn't go very far. So we said, thank you very much. And we had a very, we had a conversation with why we were offering it that way, because that's really what the property warranted. Well, lo and behold, 5 or 6 months later, we probably offered late 2016, 5 or 6 months later, we would track our properties. We're still going out there searching on deals, and just said, wonder what happened to that property. Well, nothing had happened. It hadn't traded. I think a lot of people were offering maybe 2.5, 2.4, 2.1, whatever they were offering, because that's what the deal warranted. And they just all forgot about the deal. So we went back again. We raised our price really from 2.1 million to $50,000. So we went up from 2,100,000 to 2,150,000. Within 3 hours, we get a counter back at 2.6. So now we just dropped $600,000 on the price right there, and came back around. We said, well, okay, so we have action. So negotiated back and got it closed at $2.3 million, almost $1 million off asking.
Wow.
The funny loophole to that story is within a year, we were able to do the increases, do all the values, and we were actually able to get do a cash out refi and get investors money out. But the new value of the property, $3.2 million, because of where it was. So their original asking price, they were just trying to get the value for which they didn't do into the property.
Wow, that's incredible. And it also shows you where prices have gone since then, right? I would love to get, what is it, 96 units for 2 point?
Yeah, we got it 23K a door. It was the lowest price in the sub market at some point. But yeah, that. Yeah.
It's good while it lasted, right? But and then with that property, what was the main story? Did it need a ton of capex? What did you guys have to do with it? What was the play on that one?
So there was a lot of levers we could pull there. The cool thing was the owner built the thing himself back in the 70s. So the properties, the bones were good. They were beautiful looking properties. They just had horrible management. They were running it. They had 1,000 single family homes outside of this, and they were running it like a single family home. So they needed one maintenance person. They had 3. They had the leasing person couldn't collect rent payments. So they were having a bunch of collections because you had to mail the rent payments or take them like 6 miles away. The leasing person also was not motivated at all. When we went there, she was watching Dog Bounty Hunter, wanted nothing to do with us. But they had 6 vacant units that were rent ready that weren't rented. But the sub-market was 97% occupancy was the sub-market, right? So a 3% vacancy. So we had 6 vacant units. And the time we owned the property, we never had a market because there was so much foot traffic. on an account there, the units were being rented at $100 less than if you just walked across the street to the same kind of asset. So you walked across the street to the same kind of asset, building was full, and they were paying $100 more. So just on those deltas, there was a lot there. Expense side, they were missing out. They didn't have a good application process. There was no pet fees. They had 2 laundry rooms that were down, and they were the only laundry rooms in the area. So we were able to get them back in line and put them back on and open it up to other people, get a laundry contract, put a cable contract in the building. So we had a bunch of levers we pulled. It was just one of these buildings where they were just comfortable with just trying not to do a lot and just kind of let it do, and just please let it just happen how it is. And then on that front, let it roll. And that's why you can find a lot of these efficiencies in buildings when owners treat it like that.
Yeah, because a lot of these people were like, well, why wouldn't these owners run it professionally? They can make so much money. Well, for someone like that, if he's built it, right, he probably maybe has no debt in it or very little debt in it, and he can afford to not be on top of it, and he's still cash flowing like crazy, still making great money. And that's what happens. You find a lot of these mom and pop owners, they have very little debt on these properties, and they can afford to run them like crap, right? And have everything not being going right and done professionally. And they're still making so much money that they just don't care. It doesn't affect them. So
there's that, you have the other way is that they just don't know any better, right? They don't know what they're doing, or they're just really poor owners. You just have a lot out there. So you could see it on all fronts, right? It just could be a capacity, right? Or they just get tired.
Yeah, very true, very true. What was some, I'm sure the first property, right, is you learn a lot of lessons on, because you don't know what you don't know on the first ones, right? And you learn a lot. Do you remember any big lessons that you took away from that first one?
Oh, absolutely. There's always lessons, right? So we had 2 scenarios that were interesting, that in the course of a month, we had 2 people pass away, and which and it had happened in such a timeline that I thought it was like 1, and it ended up being 2. We're just like, what has happened? And to learn that you have to go through like a set out process, like an eviction process when someone passes away, if the people don't come there and collect it. So it was a very interesting to learn that process, but that's why you have good team members, right? So that was very interesting. We also had an electrical short that happened underground that looks like it came from the main generator, but having the right team in place, it took about 6 units offline. They were to get back in the same day, even though like that probably came from the electric company, but they said that they took no responsibility for it. But having the right team in place, right? And that's where it comes down to important. Did I have to know about the eviction process for someone passing away? No. Did I have to know, the emergency electrical contact because of this? No, because I had the right teammates in place, right? But at least from that point, you could be afforded to understand that these things are going to happen, and you're not going to underwrite for that to happen throughout the deal, right? You're not going to be like, okay, potentially, each year someone's going to pass away. It's just, that's going to be steps that happen with 100 people living in a building that are going to be unforeseen, right? So you do your best to perform in the deal for narratives and assumptions that you can make, but things are going to happen outside of it, some to your positive and some to your negative, that you'll just have to account for as they come up.
Yeah, and that's awesome. And that's, like you said, that's why you have team members, right? This is not a solo sport, right? This is not you expected to do everything yourself, right? That's why you have team members who understand property management, who understands if someone passes away, what are the procedures, what are the things that we need to do to do this the right way, and that everyone is taken care of, right? And that's the great thing about large multifamily. You can have all these team members. For people who don't understand, when you are building a team, who do you bring on? Who do you need to have on your team for a large purchase like that?
Yeah, sure. So on our side, you have both sides. You have your internal and your external. So Kevin and I basically did all of them on the front end PLE. So you have, of course, lead generation. Who's going to find the deal? You have your due diligence, right? So that's going to be, once you find the deal, looking at the deal itself, making sure it fits your narrative, and also the back end, once you're under contract, going through the property, going through the financials, making sure everything's set that you do want to purchase the property. You have the underwriter. You have, capital raising, you have asset management, you have the sponsor for the deal, someone who's got the balance sheet to be able to get the deal done or size for the loan and has the liquidity, right? So that's typically your internal team. Now, that could be all separate people or a mix of people or one person, right? And so, we've done deals like this where it's 1 or 2, and we've done deals where it's ourselves, we've done deals where it's been 4, right? So it just depends on the deal and how you structure it, and also where you can provide value. we're usually very strong. We are very strong in the asset management and the capital side, right? So those are the two parts that we usually come to the table with. And some of the other parts may be ancillary on top of that. On the external team, you're going to have your brokers, you're going to have your bankers, you'll have your property management people, you'll have your insurance people, could be a cost segregation people, or could be your people that are working on any kind of contract work. So whether it's, cable providers or laundry providers, anything, telecom, solar, that contracts from that narrative, your lawyers, and that could be both your closing attorney and also your syndication attorney, right? And so I typically want a closing attorney in the state, and then I want a syndication lawyer that it's not so much state specific that's viable with the process. So you have both different partnerships right there that you have to look at. Where's the roles you're going to fill it with, and then how can you have those external teammates at your disposal?
Wow, great answer, man. It's a lot of people that it takes, but that's the great thing about it. Again, right? You can hire all these people, right? You've got to hire right and find the right people for these positions. But there are people that are specific, like you said. An attorney who's specific in writing up a purchase and sales agreement, right? You have the insurance person, right, that specializes in insurance, right? These people specialize in their fields, and you can just lean on them and use their expertise to help you. So that's really cool, man.
And if you're saying, how do I find these? You can find them by referral, right? So if you get a good broker, okay, ask the broker, what banks that these works with, the property manager likes in the area. If you get property managers, ask them, for brokers, for insurance people. You can build your team based on having teams really just collide with where they work together.
Yeah. And then, so now you're sitting at 850 from that first deal, 850 units, hopefully another 100 units coming up pretty soon from there. How will we be able to scale up from that, I think you said 2016, right? In 5 years, that's a lot of units in that space of time. How are you guys able to scale up and grow such a great portfolio?
I'd say the same part, we're probably growing too slow. It's just being consistent, being passively aggressive with our deal process, knowing that we do the steps, and just having the right teams in place. So could we do potentially 5 times this? Yes. We have the bandwidth. It's just now finding the right deals that are going to meet our metrics and meet our standpoint, right? But if you have your process now and you get the process, that becomes an easy flow part. It's making sure you have all the teams in the right spot and you continue to grow your brand and grow your identity to have the right reach with your investors. That's where you're at that part. You're typically always in one position. It's either you have more money than you have deals or money, and right now there's a lot of money and deals are at a limit, right? So we're always looking, where's the missing piece right now? So we're continually driving deals, and the 2 deals we have now, one was found randomly through a wholesaler, I'm partnering on it with my partner from another project here in Murfreesboro, and the other one in Little Rock, Arkansas is through the banker grew up there that we worked with a ton. He was home. His friend talked about this ability to just bring it on, and it's best area of town. And so we were able to go in there, get up on the market very quickly, understand where we were, understand really just the room for growth on this property, and we're able to get it under contract before it really went out to market. Plus, it had brokers that weren't really marketing it very well openly from there.
Nice. And then I'm guessing you guys have a criteria, right? Seems like you were alluding into it. Is it heavy value add? Is it light value add? Is it stabilized? What do you guys go after?
So it's not heavy value add. Coming from the construction world, I don't want to be into a super heavy project if I'm not there local. There's just too many moving pieces. There's too many reasons why trades don't show up, or schedules get misaligned, or things go separate or sideways. We're looking for that medium flow of medium capex with a building that's usually maybe fully occupied, but it just rents are 100 under, or they're just letting anybody in there, right? So it's more on the management efficiencies and lighter capex to medium capex play than it is on the heavier side. We're not looking for 20% occupancy. We're not looking for fire damaged buildings. We're not looking for anything of high distress. We want properties that are like poorly run businesses that we can go in there and find the ways to get this business back to perform.
Nice. And then is there a certain size that because I think you said that you guys have got a 25 unit coming up, and is there a certain size that you guys like to stick to?
So we prefer where it gives us the economies of scale. So typically 65 to 65 to 75 and plus. However, sometimes opportunities fall in your lap, right? So the 24 unit here in Murfreesboro, we have a 93 unit right by it. So we'll be able to get the economies of scale from the management company there. I typically wouldn't go into an area if it was just going to be a one-off property and do a 20 or 30 unit, because there's too much loss in your economies of scale. So if it's an area I'm going to grow with, right? So I brought a 48 unit in Louisville, and I knew we were going to, after we brought the 94 unit, but I knew I was going to continue to grow there, and I was able to buy the 58 unit right next door. So now we got the 48 to 58 become 106, right? So if there's an area where we're bullish on, I'll be okay to go smaller if that right opportunity goes in there, but I'm not actively saying I want to buy 20 units out there. It's when sometimes things pop up and you have to say, well, this is a great opportunity. Why not?
Yeah, absolutely, absolutely. And the interesting thing you've talked about it a few times is that you've scaled to this amount, right? So 850 units and a lot more are coming. With your wife, working with your wife, right? I have my wife, and don't get me wrong, I love my wife, but I don't know if I could work with her day in, day out, right? You know, what has been the secret to you guys sort of being able to work well together? Is there some stuff that you guys have learned to make that a harmonious relationship?
You know, it's funny is that if you recall earlier, Peely and I met working together,
Okay.
right? So we worked together before we were a couple. So we always knew that side, and you know that we worked together for years. When we became a couple, that was the newer side of it than the work side of it, right? And so it just comes to that part where we're very clear on where we fall in. Like Peely's really strong with investors, investor relations. She's really good with the branding and all that side. I deal more asset management, really into the details and the numbers, and that's just how we cross paths. Also with the family side, it's very clear. Like when COVID started, nobody knew where we were going to go, but we had the conversation. If something comes up that we need to, I was going to go all work and she was going to go all kids, right? And so it was having the conversations up front just to understand, where we each fall, on which side we fall when things need to happen. And so it works, where we both know our roles, we know where our strengths are. But it also allowed us that we came from the work environment first, gave us a little leg up.
Yeah, very cool. Yeah, and like you said, it's just important to talk about things and have things laid out, right? That I think when there's ambiguity and people are not sure what's going on, that's when stuff gets a little hairy and stuff gets, arguments start and people don't know where they are. So that's
usually not. It's like the same thing with partnerships. If nobody's having the conversation up front of what we're going to do and the partnerships typically go wrong if nobody's clear on what the expectations are.
Yeah, absolutely. And as you said, one of your specialty is asset management, right? And I'm sure you've learned a bunch over the years. What is your main focus as an asset management for people who maybe don't understand? What does an asset manager do?
So on a high level, the property manager does the day-to-day activities, right? The asset management controls the process for which the property manager is implementing, right? So you may be doing everything from working with lenders, working with investors, working with the property to make sure the plan's in place, understanding the narrative to understand how the deal is happening, to note when you need to make changes or where the plan needs to change or where the plan continues to move forward. So property manager deals with the day-to-day. The asset manager is the puppeteer of the entire project with all the pieces moving in place, which one of them being the property manager.
Yeah, and just to give people an idea, what does a day or a week look like for you, or is it so random? Is it hard to kind of?
No, it can be random. But what we do is we set up weekly calls with each property management company, where on those calls we're going to cover construction, collection, leasing, and any updates that need to happen. And so from that, it depends on once properties get stabilized, there's less and less things that need to be attended to daily, bi-daily, weekly, and it's all just coming back to those meetings. But as properties come in the front end, it may be just making sure trades are aligned, making sure quotes are in, making sure certain CapEx items are moving in, making sure our rent rate strategy is in place. And so making sure all the pieces are checked. And so that could go, it's heavier on the front side with the takeover, or projects that have more heavier lifting. Once you get into this and start streaming it out, it gets a little less of a day-to-day operation.
Yeah, it's always interesting to me to hear about what different asset managers do and like what goes into it, right? It's a lot. It's sort of making sure that the business plan goes as planned, right? Is kind of what I always see it from that point. Yeah, something you wrote down in actually one of the notes I wanted to ask you about was the 100-mile mindset. I've never heard of that before. I was wondering what that is.
So I got big into running. It started, 2008, 2007. I started running just because, no friends around to play sports anymore. Everybody's got moving on in life, right? So I started running, got myself into doing a marathon, and started doing marathons after that. And about 3 years ago, discovered ultra marathons. Just had never heard of them before. And the 100-mile mindset really just came from that. Is that many times in life, we want to have the perfect plan laid out, right? And every time we want to have it perfect, but we find that it just either keeps us from getting started, or the first thing that happens is we get out in this plan and it completely is sideways from what we thought, and it sets us off our narrative and we stop. Right. What I found with my running is that it's something I just have to do each and every day, no matter where it is, whether it's raining, I don't feel good, I don't know, my knee hurts, I'm tired. It doesn't matter. I have to get up and do this because this is part of the process. And when I started doing these ultra marathons, it's not like you could do a training like you would for a marathon, when maybe closer to race, you'll do like 1 or 2 20-mile races. You're not going to run a couple 80-mile races, a couple weeks out from it, So it was, how do I prepare with this? Well, I had to get my mind right to understand that things are going to come up with the course, but the plan is just keep moving along. And with life, not always assuming that the goal is really the achievement and that's where everything stops, is where we get in trouble. So for me, I just said, well, for this, I have to focus on just to start out of the gate. I can't focus on 100 miles. My mind has never done this before. I can't see how this would feel to do it. So I just have to say, well, okay, can I just get to the first mile? And at the first mile, can I just get to the next aid station? And maybe can I get to the next aid station after that? And can I just now get to the next one? And maybe I do that for 10, 20, 30, 40, 50 miles. And then maybe I have to start saying, oh, guys, get to the next tree and figure it out. Or can I just get another 200 steps and see where I am? Or can I just get to the bridge? And if you keep just setting that next bar and just saying, can I just get there and figure it out? You'll find that you look back and lo and behold, 100 miles are now. And that's where it really comes from, is that you if you can just look at not giving up and just saying, can I just get to that next thing? Just give myself that little win and then figure it out from there. You'll keep yourself moving forward, and you won't be so caught on something that's so, like, if someone here was like, if I talked about buying, a $10 million asset, and someone might be astonished because it just sets them off. But if they just said, okay, today I'm just going to focus on a market, or I'm going to focus on making a relationship, well, that's a chunkable, sizable thing, right? So maybe the 100 miles is the $10 million asset, but the first mile is, choosing a market or making a list of cities, right? So anything that can be achievable, that can keep the ball going forward instead of getting so awestruck by the big picture.
That's awesome. Yeah, I love that, because it's like you can't get to the 100th mile without doing the first 5, right? And you've got to do the first 5 and then keep going and keep that ball rolling. Yeah, that's amazing. Man, you run ultra marathons, man. You must be a little crazy in the head, man. I can't even imagine running 100 miles. 10 miles would be a lot for me. But
my wife's patient with me.
How long does 100 miles take to run?
It depends on the race. The last one I did, right under 21 hours.
Wow. So and it's constant running, right? There's no, like, you might be walking, I guess, a little bit, but there's not like you don't sleep, you don't rest.
No sleeping. Yeah, you'll maybe you stop at the aid station for 10, 15 minutes here and there, or something apart. But it's a constant start to finish.
Wow. And how much training do you to be able to run an ultra marathon? How much training do you have to do for something like that?
I just run. So it's
okay.
I'd say I just run daily, and just I get 5 or 6 miles in. It's just repetitive. That's just, so it's that nature that this is what it is. And so when I get out there, just some days I'll run long races. Just I get out there, maybe I'll run 15, or sometimes I'll run a marathon just out of the gate. But most of the time, it's just that same thing, just so I'm ready when that time comes to run farther.
That's incredible, man. That's incredible. Well, very cool, very cool. My friend does ultras as well, and I think he's nuts as well. But he probably thinks I'm nuts as well. So, but it's amazing. Must be an unbelievable sense of achievement, right? When you finish a 100-mile race, right, or 100-mile run.
It's always good, for sure.
Yeah, cool. Well, great story, man, and thank you for diving into that first deal. There's a lot of interesting stuff that came in and sharing a ton of great information. So I really appreciate that. But as this show is called Wrestling with Real Estate, I like to incorporate some wrestling-related real estate questions. And the first one is, what would your wrestling name be?
I think it would be the sheriff, because I usually am that person who just goes out and gets my guy. And that's sometimes the activity that has to be done. I'm the person that, if I'm told a no and I believe there's a yes, I'm going to keep looking and searching for that person who's going to tell me the yes for the activity. And that's always been the case. Very
cool. The sheriff. I like that. Every wrestler has a special move. What is your special move in real estate?
I would believe it's ways to find other alternative income sources that no one thinks of for the property.
Do you have maybe an example of one that?
It can go deal by deal. Right now, there's a bunch happening with 5G. So I've been entertaining 5G opportunities for buildings. You can get cell towers on top of the buildings, or looking at different options to put on cable contracts for buildings, or adding in basements that were just neglected, putting in storage units and renting them out to the tenants. Other ways that you can just pick up income that no one has thought to use with ancillary space, or just with items that could be, really a win-win on both sides.
What's been the biggest body slam you've taken in your real estate career?
I think I left one off on the 94 unit. That was interesting. We actually had a shooting at a nearby building. It wasn't a dangerous area, but really we had like one of the buildings was a 10 unit of the 94. Really made the tenants scared. We thought they were going to all move out. Well, we had a vacancy there, and I said, well, it's facing the back. Can we just use this as a stakeout? And so I called all the city officials, started getting in touch with the detectives and this and that, and ended up getting a detective in there. And the detective was able to do a stakeout of this existing building where it was owned, or was being run by the city. It was a city-owned building, but there was about 10 or 12 people in there that were just not even tenants, but were just causing all kinds of activity. So lo and behold, for that 3-4 week span, they used the unit as a stakeout, was able to arrest everybody there and get it back safe. So that was a pretty surprising moment, because you go for that point of just one, like, of course, you don't want the building, you don't want like all your tenants to move out, but you don't want them to be hurt, right? Most importantly, you don't want them to be, hurt or living in an unsafe area. So that was one of those moments of what to do. And we said, well, let's use a unit for a stakeout.
That's crazy. That's good. I'm guessing it all worked out at the end, I guess, right? But it's not what you expect when you take over a property, I'm sure, yeah. So was there a moment that you were standing on the top rope getting ready to jump, but you were too scared?
I would say probably we could have done a 50 unit prior to 94 unit, and we didn't make the right offer. We were too conservative in our offer, where today would probably be a steal, just because we were giving ourselves that self-doubt that we basically priced ourselves out of the deal, where we knew better, but we put an offer in that was way too conservative, just for the scenario in there of every worst case scenario that would happen, but that never happens, right? And so that part, we probably walked ourselves away from the deal by trying to be way too conservative, just because we still had that doubt in our mind.
Yeah, very interesting. Well, man, thank you for this, for sharing all this great information, man. This has been a really fun interview. I really appreciate you making the time. But before we go, if people want to reach out to you, if people want to get in touch with you, how can they do so?
Yeah, sure. So 2 ways. We're actually putting on a multifamily event. We just did one in March. We're going to do one coming up June 10th, 11th, and 12th, multifamilyliveevent.com. 3 days of this action-packed chaos going on with just a ton of all multifamily to hit you over the head with it. If you want to learn more about us, you go to yarusiholdings.com. You'll see, you can see more about Peely and I, more about our portfolio. You want to learn how to invest, you can all do that there as well.
Very cool. Well, thank you so much, man. Thank you for making the time, and have an awesome rest of your day there.
Thank you.